Well, Samir Narayan joined just now. It's the first time we are interacting with him, at least on this forum. So it's a very old friend of mine. We go back at least, Samir, what, 20 years now?
20 years.
You started your career as a pharma analyst and now fund manager.
Yes, absolutely.
So what should we start with? Pharma first or stocks first? Or pharma stocks?
Pharma stocks would be probably a good way to begin, because
not the best of times for pharma
not the
stocks
best of
right
times.
now. Yeah.
I think the sector has seen a lot of upheaval because the whole story started earlier with the generic thing, the US generic market. So that story pretty much played out in the entire early part of 2000s. And then as it started maturing, the market became very competitive. India had the largest FDA approved plants outside to the US. So the competition just ensured that the US regulator woke up and said that suddenly we seem to be getting a lot of goods from this country. So let us go and do a more detailed checks. So the activism became high, and then we have these cycles of, between US presidential cycles, people would like to sort of temper down because there's a lot of large lobbying aspect that comes in, especially when it is big pharma. So I think those factors, but I think now a lot of companies are waking up to the fact that the method of doing business in the regulated markets is now becoming a part of the process. So earlier it was, you could see not many guys up to the mark, but today most of the people, it's become a hygiene factor. But having said that, you still see that the whole issue of FDA compliance is now being put into the process at the inception. So that's why you see companies are now facing challenges, and coupled with the fact there's a lot of growth that is not visible, because today most of the genericization, the early part is pretty much done, because there's not been too many big blockbusters that have been available for generics. So therefore, what is it that you go and pitch for? Because effectively it was rupee cost and dollar revenue. So that's where I think
Samir, but for every sector, you first see inception and incubation, then you see recognition, and then you see boom and a bust. But when the new cycle starts, after a boom and a bust cycle, the big companies, they get bigger. The large one gets large, and that's how migration has moved in IT, in FMCG, autos. Why in pharma, small companies have taken a hit and the large ones are still struggling. So Lupin, Sun Pharma, Aurobindo, they're the large companies. They understand the pharma business, better than anybody else. Yet Sun is struggling, Lupin is struggling, Aurobindo is struggling.
I think each one would have specific issues, because and there's a learning curve associated with it, because as far as Sun is concerned, you had corporate governance, the whole distribution arrangement, etc. In Lupin, they had some setbacks on the FDA side from key plants, and in Aurobindo, actually Aurobindo is perhaps in a position whereby they'll be able to come up with the learning curve, and I think there the basic building blocks is having the advantage of all the reversals of the earlier big guys. Now I think the small guys, the advantage is that because they are niche, they are not addressing the large part of the US market. They don't have a cost structure that has to then ensure that the money keeps coming in. So therefore it is, let's say, low volume but high value.
Yeah,
so I think that's where you are finding the chances of probability of success to be able to make through the FDA scrutiny and still put your product out there is probably better. Whereas if you're tackling, say, 50, 100 products at a go, then it requires a large amount of machinery which has to then keep churning out. And on a large base, see, effectively base effect is, it works to your advantage beyond a critical mass. But then when competition gets in and there are not many new so-called profit opportunities of blockbuster available, that's when people find the going a bit tough.
But you don't think stock prices have absorbed all this in already? Or is there more weakness to go in stocks?
See, there has been some amount of tempering on account of the analyst estimates, but I think having said that, the problem is still on an earnings basis, these stocks are not cheap. Now, when I say cheap, cheap is a very relative word in today's context. So, a 20 times earnings for Sun at a 20 times earnings, is it cheap? Well, I think in case you see revenue and profit growth coming in, then people will start building the hope. I think India, the problem is not, PE, the problem is price to potential. It is PP. The problem is that today, all these companies are in a building blocks are in place for you to power far higher growth. But the fact is, when will it materialize? So there's a time element attached.
So you were just saying, Samir, before we get to some of the other sectors in focus, that markets are still digesting or processing the good news. So, talk to us a little about that. What you see sort of playing out over here, because everyone's been very hopeful that we would see exponential growth across certain pockets, at least, going forward.
Well, I think the expectation is that today the delivery of the NDA2 will be in a far better context in terms of what people will find making a difference to their daily lives. I think NDA1 was all about putting the hardware in place, and now since the hardware is pretty much in place, now you will find that the big tickets should now start coming in. Now, having said that, today the verdict is taking time to digest, because I don't think firstly most of the pundits had any idea, and including the best of them, and today the Prime Minister brand has just ensured that he has taken it to a different level whereby there is no competition. So today if he has to leave a legacy, it is in this term. So all the big hitting changes should happen now. So maybe that's what it is, not price to earning that market is worried about. It is price to expectation. So I think that's what is getting priced.
Okay. The pre-open rates, rupee is showing strength. No, it's flat. Sometimes a flat kind of a market is good market, because you got to bear in mind that a lot of strength in rupee is bad news for exports, and given where the trade war situation is, a weak currency is a natural advantage. But in terms of the market breadth, I go back to that point once again, that the market breadth is doing phenomenally better. The narrative of the market in 2017 was, the lower you go in terms of an market cap category, the higher returns were. So the tiny tots on the market in 2017 and early part of 18, they started making money. Then came that entire selling tsunami, and investing in small and mid cap has been a forgotten word in 2019. I think now there is curiosity which is coming back. I'm not making a case for a stellar bull run coming back in mid and small cap stocks, but yeah, I mean the same folks I interacted with 3 months ago, 3 weeks ago and 1 week ago, they are now telling me that by mid cap dekhte hain, we are getting values emerging. I mean, we'll talk about it, what you're buying, what you're not buying, but right now Pankaj is standing by with a khabar, and Sameer, it's a segment you must catch on to, because all market men, they want khabar. So here's the khabar for the day.
So Nikunj, this is the follow-up of the cover that we did yesterday. We told you that Reliance ADAG Group is close to selling stake into its general insurance business, and now we are getting an update on that. Piramal's may be into talk. Of course, Piramal's have been quite eager about their financial business, the growth over there. But again, we are also picking up that Piramal's is in early stages of talks. It's not that anything has been finalized, but they are definitely considering this particular proposal from Reliance General Insurance. Today's newspaper quotes that Hero FinCorp is also invested, so there are big two corporate giants that we can pick up that are into a part of this deal. As we told you yesterday, they are the 10th player with about a 4% market share, 5,000 crores plus in terms of premium, and in terms of valuation, what I can pick up in terms of update is that it's greater than 5,000 crores that they're looking at. It could also be close to about 6,000 crores in terms of valuation. So just an update of a cover on D Street tomorrow. ADAG Group has been looking to deleverage, especially Reliance Capital. They did their Reliance AMC stake sale to Ripon Life, and now, as we told you yesterday, that they are close to finalizing the general insurance business. Today we are getting two names. One is Piramal's and second is Hero FinCorp. Both of them may be quite interested to buy stake into this particular general insurance arm that is up for grabs.
Sameer, markets are speculating that who will be the next FM. How important is that both? And if markets like a name which they're happy with, what happens to the market in the short term then?
When you said who will be the
Who
next?
will be the next
Finance
FM?
Minister.
That's what
Finance
markets
Minister.
are speculating.
I think the continuity of policy has been something that has been a hallmark of the NDA government. So it is irrespective of the man. I think more importantly, since the hardware is in place, whoever comes in, it's the question is how fast will the pedal be pushed.
What can they do? Well, the question which we're asking everyone is that what is that they were not able to do in the last 18 months when they had full majority, when they had majority in both the houses, and what is that they do in the first 18 months?
See, I think the whole argument of job creation, etc. Yes, people need, India needs 20 million jobs a year in the formal sector, but I think what somehow or the other the data doesn't capture is, let's say for example, a outfit like Swiggy. On their delivery platform, there are almost 125,000 people. Now, that is a workforce that is earning $300, $400 a month. So, that somehow or the other nobody is capturing. So, that guy, he's pretty happy with his life. and he thinks that it is this man who's made it possible. So today the whole narrative of Modi hatao versus anything else, there was no development or any other plan that was put forward to any of these people. And I think these new voters who've come into the voting class in this election, they probably feel that this is a guy who's not from a dynasty, he's come up the hard way and he will give us a chance. So nobody wants entitlement today. People want a fair chance and an opportunity to earn their living. I think that's the key element. So whether whoever is the FM today, I think the low hanging fruits are very clear. That okay, you try and ensure that there's a small fillip to the economy, you give some stimulus, but I think our experience of 2008 and 9 has not been that great in terms of providing the stimulus through the fiscal route, because then you have the consequent problems of bad loans, you have inflation. Thankfully you've got the inflation in check at a time where so the food prices are not looking too great, because if you have a delayed monsoon or even slightly a bad spatial thing, the food prices inflation could still become sticky. And that is something that hits the common man the worst. So I think that's where the whole expectation of fiscal stimulus may be slightly, unfounded at this stage.
Okay.
Everyone has been saying that they may be constrained on the fisc, but that they will have to find some way of getting the system going. And we can talk about that endlessly, whether they'll go into privatization or not, and so on and so forth. Markets, however, have been on a roll expecting infrastructure to boom, construction, some of those pockets.
Yes.
Would you buy into that already, as you were talking about expectations earlier? Would you wait to see the fine print?
See, I think India has already seen a fair amount of work getting done on the infra. For example, when last you remember that we've seen cement and steel growth happening at 8% consequently for two years in succession. So I think that has happened. The highways, the roads, I mean, there you're clearly seeing that now we move from the historic 11 kilometers a day to close to about 28-30. So all that work is already in place, and perhaps that is getting recognized. The thing is that today, if I make the Make in India plank, because today this whole backdrop of trade war versus US-China, India will then find a ready destination for you to ensure that you create jobs and you create employment, at the same time provide a good enough cost structure for somebody to do business on. So I think the whole Make in India program can be given a different lift, and it can be Make in India not only for the world but for India as well.
Right. Okay. The pre-open rates are telling us that we may not be in for cracker of a session, but that's perfectly acceptable. We should not expect,
Fireworks daily.
I mean, look, fireworks, there's trade war. There is a huge trade war. And I think now global markets also recognizing that, at least comments which are coming from the Chinese newspapers, they are indicating that, forget about, the Chinese are now claiming, at least that's what Chinese media is claiming, that look, we will restrict the export of rare metals to America. Why is that important, Aisha? The reason why that's important is because rare metals are used as an important substitute in batteries, lithium batteries. So all this entire plan of making EVs in America and lithium batteries in America could suddenly hit a pause button if you don't get the necessary ingredient from the Chinese.
And they can only get it from China. That's
and that's exactly what Ray Dalio has said in his note, right?
Yes.
Why America would continue to need China, and China has the upper hand.
Yeah.
I'm just going to shift gears and just get into some more stock ideas for our viewers who are really aiming to make money today and this week. And CK, let's revisit your favorite Nifty idea for the moment.
Well, I think Nifty currently, if you see it from a slightly longer perspective, is stuck in a range. On the downside, it's about 11,700, 715 is the bottom range. And on the top side, about 11,900, 910. This I'm talking strictly in the shorter term. So we would need some event or some news trigger to take us out of this range, because the result season is more or less done. And I think almost some 45 out of 50 stocks in the Nifty, they are already out with their numbers and the views thereupon. So therefore, we will need something outside of, let's say, corporate performances of the Nifty stocks to really take the Nifty out of this range. I think once we are past something like 11,910, 920, then it would be off to the races. But at the same time, I think it will be very difficult for the Nifty to break down, because there is no inclination to sell in this market, at least not beyond intraday basis or 1 or 2 day kind of basis. So maintain a bullish bias, buy on dips is what I would say.
All right, that's okay. Now we've started this new exercise where we on a daily basis try and pick up all the big words which in a sense are the dominant words of that day. ET Now word cloud, and which were the words and the phrases which dominated ET Now newsroom yesterday? Well, let's recap them.
GDP number, Nifty and Bank Nifty 500.
Okay, M&M, well, that was a buzzing word yesterday. And before we walk into trade this morning, what is the ET Now Greed and Fear Index indicating? That's a mathematical indicator which just derives, and for those who want to understand it, there's a website on which you can go and check the entire detailed description of this mathematical representation, volatility, market breadth, prices in gold, global flows, and then mathematically this algorithm tells you that where the markets are. The ticker tape data seems to be telling us that if not in the extreme greed zone, we are nearing that greed zone. So the participation level, which was completely bombed out, everyone was in a sense disheartened, disillusioned. They were waiting for an event to get over. I think that numbness in the market is over. Samir, for someone who's sitting on the cash now, too bad the train has left the station. Buy it on a bad day, or if you don't jump in now, your chances of carrying that train is going to be impossible.
Well, I think the way it works is that there is always a bull market happening at any point in time in some sector in the market. And that means where you have, valuations are sane, the business outlook may not be great, but it is changing at the margin and ownership is low. So I think the idea is that that is where you need to start looking at, stocks within that and who are best positioned.
So why don't you tell us what would you like to buy if you get fresh cash to invest today? Assuming that somebody can digest a 15% decline at 20% volatility, that could happen anytime, right?
Anytime.
What would you buy for long haul? 2-3 years.
Okay. I think after what we've just seen.
No sectors, please.
Sure. After what we've seen, after the WhatsApp moment of Indian politics, now people are digesting that if India growth has to happen, it can't happen without power. So I think utilities is a fantastic place to be in. And now people would say that, we are saddled with a lot of capacity which doesn't have linkage, etc. But I think even within that, Google calls this the moonshot thinking. When India put out a solar power target, way back in 2014, we actually hit that 20 gigawatt capacity 2 years ahead of time. Now we've put a target of 100. So I think the idea is that you have to think big, and think big which will create a larger impact. So power and power utilities are, I think, a good place to be in, both from the demand side. You need small tinkering, and I think if that happens, which is a matter of discussion,
Power grid NTPC,
or even a lot of IPPs, independent power producers.
okay.
So I think those are people where you will find that in case the linkage is there, you have a decent PPA in place, you are getting a decent tariff. I think the demand is there for the asking, because India cannot grow without power.
Okay, fair point.